Innate.
An important aspect of financial reforms is the development of a pool of human resources having the right skills and the expertise to help enhance growth in the financial markets. Cultivating a culture of knowledge to help investors make informed decisions is the National Stock Exchange. With a multitude of initiatives, the National Stock Exchange aims to spread awareness in financial education right from schools up to college levels. One such initiative directed at making India's young workforce financially educated is its pioneering venture with CNbc TV 18, NSE FINWIZ. We launch yet another season of NSE FINWIZ by taking a look at the years gone by.
Delaying it by 5 years could cost you half the capital you could have accumulated to meet your goals.
Even a small amount of money that you set aside can become a large amount tomorrow.
NSE FINWIZ is a knowledge-sharing platform where specialists from the financial world visit some of the top companies across the country.
If you really want to create wealth, go with the most simple option. In mutual funds, particularly equities if you're investing for long term, go with something called diversified equity fund.
Bringing in their expert views to coach young professionals on different aspects of finance.
NSE FINWIZ is a platform for people to interact, get their queries solved, get over their inertias, address the myths, and make sure that wealth management is rightly understood. And they make sure that they start saving early, which is the most important part.
NSE FINWIZ is a fantastic show which educates investors. Not only does it educate, by having these discussions at various campuses, it also helps you learn from other people's questions, other people's mistakes, and other people's experiences, because you have the benefit of maybe somebody in that group who has had varied experiences, and you may not have had that experience yourself.
The idea of FINWIZ was to spread awareness in such a manner, in a very easy concept, and no jargons, so that they can understand it very well. The idea was to talk about money in a question and answer format. So the audience may have questions and they would like to ask directly to the panel, and the panel would answer the questions. Those questions would help other people as well, because those were very similar questions.
People did not have much knowledge about these financial products. They didn't even think about that. Usually means their salary comes. Sometimes these young people said that our parents only managing our wealth still. Or for tax saving we invest in insurance policies. Nothing more than that. Hardly people had knowledge about different types of mutual fund. For them, like mutual fund is also one product. That's it.
With each passing year, India's workforce is constantly on the rise. Managing one's monthly finances is no doubt a serious task unless taken care of wisely. With initiatives like NSE FINWIZ, the National Stock Exchange aims to introduce more first-time investors to the Indian market and thus transform India's strong culture of traditional savings into an equity-oriented culture.
In India, we are the largest working population. The young working population is one of the largest in the world, and we are also growing economy. So we would see huge talent, being incorporated into the industry, and all specialized fields. We have different fields, people expertising in different fields. You have somebody who's an engineer, you have somebody who's into designing. Well, these are specialized fields, and the central focal point of all these occupations is money eventually. So there has to be some kind of knowledge. There has to be basic knowledge. We're not saying you need to be experts in managing money, but you need to have a good sense of knowing money, knowing finance, and then managing it. You need not be an expert, but there has to be some basic knowledge which you need to have, so that you can basically use money and take the benefits of it.
Is insurance saving or investment at all?
Insurance companies, if you see after the expenses and the fund management charges which they give, is actually very, very bad returns. There are two kinds of insurance policies which you can take on a personal basis. One is a pure insurance policy, which is a term policy, and the another is investment related policy. Those are like endowment policies, money back policies, ULIPs, etc. So I'll give you a very simple example. Say there is a 25-year-old person, he is taking an insurance policy of say 1 crore rupees, then the premium of that is, if you take a pure term policy for 30 years, the premium of that would be close to between 8 to 9,000 rupees, depending on which insurance company you take, whether you take online or offline. So that is the first option which he has. The second option is he can go for an investment come insurance policy, say a money back policy. On that, the premium for it will come close to 1,13,000 per annum for 30-year period. So over a 30-year period, he has paid 33,90,000 rupees as premium. Instead of that, if he had just taken a term policy, he would have saved 1,04,000. That is 1,13,000 minus 9,000, 1,04,000 plus annum. If that 1,04,000 he had created a proper portfolio of his own asset allocation, investment in stocks, bonds, etc., he could have generated anywhere between 10 to 12% return. Assuming a 10.5% return on that over 30-year period generates a corpus of 2 crore rupees.
In an exchange traded fund or a mutual fund, there is a company and people involved who will be investing the money on your behalf. In case of a equity mutual fund, there would be a fund manager who would do the right things and select stocks for you. And they have their own methodology in terms of where they are investing. But usually they are all long-term based and not a trading kind of strategies. However, when you are investing into equity market directly, well, first of all, you should refrain yourself unless you have a lot of time doing the research. And we are not talking here about the trading mindset, we are talking the investing mindset.
If you look at last decade and a half, the income levels have gone up phenomenal. So youngsters are earning much more than what their parents were earning. Spending avenues have gone up. Obviously, they have access to global facilities, services, products, services. Investment options have gone up, and we have more and more products coming. We have choices. We can invest globally. And so are the loan avenues in terms of borrowing. Having said that, while this has gone up, the actual management of money is not taught anywhere. So they have more options, they have more choices, but they don't know how to handle that.
Wealth management is a continuous process. Wealth management is not a discrete process, it's a continuous process of actually managing your money such that you increase the probability of your financial well-being in years to come. Unfortunately, our society measures success from the financial well-being. So I personally think for you to actually gain respect in the society, you need to manage your finances properly, right? And make sure that you never fall into a debt trap. So what happens is anybody who does not do right amount and right methods of wealth management are not followed, he is more prone to getting into a debt trap, which can actually cascade into a blow up more than you can imagine.
Are earning a lot, but somehow they're not saving good enough.
A platform of this kind benefits employees and organizations as a whole by busting any myths about financial planning, enabling individuals to opt for wealth management techniques and diversify their investments.
Insurance comes first, the 20% investment comes second, and after that spend if any money is left.
It also imbibes proper financial skills among young professionals and positively benefits the organization by keeping employees informed.
When you're investing in a bond, generally you end up holding it till maturity. Whenever there is a change in the interest rate, you don't get benefit of that. Where when you invest in a mutual fund, right, the fund manager manages cash flow, which means that if the interest rate is going down, for example, today if you see the interest rates are going down, your FD is giving you a lower return, your small savings are giving you a lower return. How do you improve your return? By investing in debt funds, because there is an inverse relationship between the bond price and the yield. So I think it's time for investors to go beyond the safety that they look for and look at investment options like mutual funds.
Okay, if you're falling in a taxable bracket, it always pays to save tax. Okay, why should you pay to the government if you can save tax? So if you plan well in advance, it enables you to actually save the maximum amount that you could do. Okay. Not only that, two, it helps you to actually optimize by investing in the right set of product which gives you the best possible return. You can mix and match. For example, a lot of our money, PF gets deducted. To some people, if the PF fills your actually 80C, then you don't need to save tax. Okay, one. Two, a lot of us have home loan. The principal portion of the home loan comes under 80C. People who have kids and paying tuition fees are part of that 80C. So a lot of people don't know, if all this adds up to that limit of 1.5 lakh and you're already exhausted, then you don't need to save tax saving product. But if it's not done, then fill with the right product.
And I think that gold as an asset class typically gives you returns which are inflation adjusted, or it's supposed to. Over a long period of time, actually it has been below inflation adjusted returns. So if I'm looking at returns, probably land is sort of a cleaner asset. All the negatives that Harsh spoke about earlier about properties being depreciating, etc., don't come into play in land. Now the question only in India is whether the title is clear, whether there will be no encroachment. Those are types of things that you have to worry, because you'll invest in it, the price has gone up, but when you go there, you suddenly find that that land is not available for you, somebody else has gone and parked himself there. So that's probably the only negative, I would say, and if this is a straightforward answer to land versus gold.
NSE's role in getting FINWIZ to organizations has created an opportunity for young professionals to further update their financial quotient. FINWIZ team has traversed the length and breadth of the country in a bid to spread financial awareness and help individuals secure their financial future.
The power of compounding is magical. Mutual funds to give you better returns.
With over 40 campuses visited so far, the FINWIZ team aims to educate the corporate employees on financial management through well-trained wealth managers who impart expert advice on their perspectives.
So wherever I am going to invest, where could I get the best returns that is available in the market?
The experts that joined the NSE brigade featured Kalpesh Ashar, CEO and founder Full Circle Financial Planners, Uday Dhoot, founder of oipaisa.com, Pankaj Matpal, CFP and MD Optima Money Managers, Feroz Aziz, Director Anand Rathi Financial Services, Gaurav Mashruwala, Financial Planner, Gajendra Kothari, CEO and MD Etika Wealth Management, Harsh Rungta, a financial planner, Lovai Navlakhi, CEO and founder International Money Matters, Hemant Rustagi, CEO Wise Invest Advisors, Ankur Kapoor, founder and CEO of Plutus Capital, Tanveer Alam, founder and CEO of FinCard, and Harshvardhan Rungta, CFP of Rungta Securities. The financial advisors bring in their experience and expert knowledge on various products and topics covered over the seasons. This is to make sure the professionals break the myths on a gamut of financial options available in the market.
The cost of living at the first year of retirement is going to be an X amount. The second year of retirement is going to be more than the first year of retirement. And so is the case of in the 10th year. So you need to plan your investments in such a manner that inflation is also taken care of, even in the 10th or 15th year of your retirement. So first is identify the amount that you will require for retirement.
Right.
And you have to start accumulating and saving money to accumulate that kind of retirement corpus. Post that, the effective implementation is how do you effectively invest that money in the most appropriate manner so that it takes care of regular income in the initial years as well as in the 20th year of retirement. If you only have short-sightedness and think that, okay, I'm getting sufficient money for whatever I require today, it may be a very difficult situation after 20 years of retirement.
I always believe in the power of simplicity. You know, if you really want to create wealth, go with the most simple option. And in mutual funds, particularly equities, if you're investing for long term, go with something called diversified equity fund. Stop there. In diversified equity fund, the fund manager choose and pick where he wants to invest. You don't have to take any call on sectors or themes. He decides which is the best investment right now and he takes call. So in mutual funds, we have sector funds, we have mid-cap funds, we have large cap, we have small caps, and all of us get confused. But to most of our clients, we always tell, go for plain vanilla equity fund and you'll be absolutely fine. If you hold for long term, you'll be able to beat the market, you know. So don't confuse it and don't have too many funds in your portfolio.
Financial planning has become imperative to a number of professionals who start investments early. Some settle for conventional products, others like to take risks and test the market.
If you say buy in a physical gold, number one, you have to incur storage costs. You have to either buy something, some locker or something, or you have to rent in a bank or something where you have to pay rent. Also, you have to incur, if you take insurance, you have to incur insurance also for that. And you have to also, if you buy ornaments, then anyway that is not an investment because there are some kind of making charges, 15 to 20% in that. On the other end, if you buy in a liquid demat format, then it's a very good investment because there are no storage costs, there are no making charges. Yes, there is a very small amount of fund management fees, but which are very minimal. So you get an investment. Plus, if you see from a tax angle also, physical gold becomes long term after 3-year period. While in a demat form, in an electronic form, it becomes after 1 year. So from all angles, it is as an investment. If you have to do in gold, it's always to do better to do in an electronic format than in a physical format.
Take what is called an overdraft home loan, and your current home loan, if it is at a higher rate, this loan you will probably get it at a lower rate of around 9.4%, 9.35%. It's an overdraft kind of a loan. Park this money there. So you are saving it at the home loan interest rate, which is, even if you are at the highest tax rate, even then you are saving money at 6%. So that is the risk free because you are lending money to yourself, you are reducing your borrowing liability, you can withdraw it anytime you want. That is the ideal place to keep your contingency fund.
So is the case with life insurance. If you are an earning member of the family, there is some financial dependency that people have on your income. So if you are not there, your family requires some financial security. That financial security comes in the form of insurance, and that can come only in the form of a term plan, wherein you insure yourself for the appropriate amount, could be 1 crore, 2 crore, depending on your income, and you pay a small premium for it.
Although a majority of our young workforce is well equipped with financial knowledge, a section of the population is still apprehensive about adapting to the cycle.
If you want to create wealth for the next generations, you have no option but high-risk investments like equities.
Hence, it's important for this section to bridge the gap between earnings and investments.
I think all young employees like me really should get the right knowledge, not only knowledge, but the right knowledge of where to invest. I think we all are really afraid of the word risk. And I think, sessions like this, which kind of, inform you where to invest in the right way, I think it's really great. And, you can't go back and have a new beginning. But if you start now, you can have a great ending.
Post the event, one thing that will be changed is I will be more into, I'll start my investments more into mutual funds and also to diversify it. Earlier to this, I was thinking in which mutual funds to invest. So the best thing is that there is a diversified mutual fund. So we can always invest into that fund and earn a good amount of returns.
This year, NSE FINWIZ goes a notch higher as it hopes to capture maximum professionals from various campuses in line with its objective to enlighten the young workforce about financial management. The 5th edition will thus aim to address all possible queries pertaining to personal finance in order to allow them to be financially independent and dream big. Keep watching CNbc TV 18 to know more as NSE FINWIZ comes to your city with a will to bring about a change.